Most people don't miss dips because they don't know what to buy. They miss them because they overthink when to buy. They wait for perfect confirmation. One more indicator, one more treat, one more reason to wait. And by the time everything finally feels safe, the dip opportunity is gone. So in this video I want to show you guys how I personally buy dips without overthinking it. This isn't a day trading strategy. It's not about catching exact bottoms, and it's definitely not about being right every time. It's just a simple framework I use to ask the question, is this a good opportunity to accumulate or not? I only use 3 things for this: buy zones based on moving averages, market history for context, and the fear and greed index for confirmation. And that's it. No prediction, no complex strategies, no staring at charts all day. The goal isn't perfection, it's actually acting without freezing. So let's start with one of, if not the most important part of this, which is buy and sell zones. This again is the core of this whole approach. When people say buy the dip, the problem is, what even is a dip? Instead of trying to answer it with exact prices, I use different zones for that. On this chart you'll see different colored areas ranging from very cheap to very expensive. These are the buy and sell zones I use to get an idea of where price is relative to history. These zones are inspired by crypto currently. There are not signals, there are not predictions, they are just context. All these zones you see are based on moving averages on the weekly time frame, which makes this a more long-term approach. For example, the very cheap zone is based around the 200-week moving average. That's simply the average price over the last 200 weeks. Historically, that area has been associated with long-term value, not instant reversals, just value. And the same logic applies to the other zones as well. Each one of these zones are built around its own moving averages, which gives me a rough idea if the price is cheap, fair valued, or expensive. Now I know when you turn all these things on, it can maybe look a bit complicated, but the important thing is this: I'm not trading these lines, I'm reacting to the zones. If price is in the fair value, I DC as I normally would do. If price moves down to the cheap or very cheap zone, I allow myself to DCA more aggressively. And if the price goes to expensive or very expensive, I slow down my DCA and start taking some profits. And that's it. These zones are again on the weekly time frame, which means they don't change overnight. We might spend weeks or even months in one zone, and that's fine. This isn't about speed, it's about having a plan before emotions kick in. You can copy the same setup I use if you want. All you have to do is go on TradingView. You can search for 200 WMA extensions and build your zones from there. Just remember, since these are moving averages, they are gonna change accordingly as the price goes up and down. So just remember that sometimes these zones will have to be rearranged. My point with this is create zones and not exact prices. Precision is what causes overthinking. Zones give you permissions to act. The next tool is probably one you have already heard about. It's the fear and greed index. And I want to be very clear here. I keep this very simple. I don't care about an exact number on the fear and greed index. I don't check it every day. I only care about extremes. The fear and greed index measures market sentiment on a scale from fear to greed. When fear is high, people are panicking. When greed is high, people are getting overconfident. The way most people use this is very simple. Buy when there's fear and sell when there's greed. But I don't use it on its own, because on its own it can be misleading. Instead, I use it as confirmation. If the price is in cheap or the very cheap zones and the market is fearful, that's a strong signal that things are uncomfortable. And that's usually where long-term opportunities appear. On the other hand, if the price is in the expensive zone and the market is greedy, that's a warning signal, not an instant sell signal, but a reason to slow down. And this part is important. Fear and greed can stay extreme longer than you think. You can have extreme fear 2 months into a bear market and still be heading lower. And the same thing the other way around for greed. And that's exactly why I don't use this tool on its own. Buy zones tell me where to act. Fear and greed tells me how uncomfortable it should feel. If it feels easy, I'm probably too late. The last thing I want to talk about is history. And this is usually where a lot of people start to overcomplicate things. So I'm intentionally gonna keep this really simple. Historically, the crypto market, especially Bitcoin, has moved in a 4-year cycle pattern. It's not perfect, it doesn't repeat exactly, and there is no guarantee that it's gonna do that in the future. But so far, it has been consistent enough to give some context. I'm not trying to predict tops or bottoms. I'm not counting exact days. I'm just asking, where are we in the bigger picture right now? If we take Bitcoin and zoom out on the weekly time frame and look at all-time highs and then go back 4 years to compare behavior, you'll notice it doesn't line up perfectly, and that's the point. It's close enough to give some context without expecting the markets to repeat exactly every time. Now let's use this example of the last all-time high. If we take that and go about 4 years back, you can see it lines up almost perfectly with the previous all-time high from that cycle. If we look at that last cycle, you would see after that all-time high, Bitcoin went into a bear market. If you look at today, we have been going down for about 3 months now. And so far for Bitcoin, it has been moving like this for every cycle so far. So it's close enough to give some context without pretending that the market is going to repeat exactly every time. Not to find the same price, not to find the same structure, just to understand expectations. Historically, after these major highs, markets don't recover instantly. There are these long periods of drawdown, consolidation and frustration. So if history suggests that we're in that kind of phase right now, I don't expect fast recoveries or constant upside. I expect volatility and patience to be rewarded. History doesn't tell me exactly when to buy. It tells me what kind of environment we are currently in. And if this 4-year cycle pattern ever stops to be unuseful, I'll let that. Until then, I'm gonna continue using it. And of course, you can go way more into detail with this 4-year cycle pattern, but I wanted to keep it very simple for this video. So now everything works together. Again, I use buy zones to know where I'm allowed to buy, fear and greed to confirm that it should feel uncomfortable, history to manage expectation and stay patient. If all three roughly lines up, I don't look for any more rules. I don't add more indicators. I don't wait for perfect certainty, because that's where overthinking starts. This again is long-term investing. I don't check these 3 things on the daily. If you were to use these things, you can check them on the weekly or even monthly, depending on how good opportunities you want. The goal here isn't to catch perfect bottoms. It's to stay consistent, calm and actually participate. So that's really it. I know when you list everything out, it can sound a bit complicated, but in practice it is very simple. I'm not trying to outsmart the market. I'm not trying to predict the future. I just want a framework that helps me act instead of freezing. Because in my experience so far, the biggest mistake isn't buying too early. It's not buying at all, because you're waiting for that perfect confirmation that is probably never gonna come. Any rule that makes you freeze instead of act isn't reducing risk. It's delaying learning. This approach isn't meant to replace advanced strategies or analysis. It's meant to give you a simple baseline, something you can fall back on when emotions are high. And if you want me in future videos to go more in detail with like history and how I use that to navigate this market, please let me know down below. But for now, this is how I buy dips without overthinking it. If this helped, remember to like and subscribe. Comment down below what I can do better. I love to hear from you guys. Thanks for watching, and I'll see you in the next one. Peace.